Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 10th, 2021. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Good to see you. Here's a look at the ES in the daily time frame. One thing we were looking at to finish the day yesterday was watching for a rejection at the previous low for a bounce back within the developing 3-day range. This market, it seems very clear right now that it doesn't really want to get outside this range just yet. The first day created a very good range. Second day mostly stayed within that range until the last hour, but still inside the range for the most part. And here we are, day 3, still trading within that range. We may finish the day inside this range. However, we did get positive CPI news here earlier, and that has led to a nice push higher. I mean, that initially led to a rally from about 46.75 at least, and we're 20 points higher right now. So again, we're inside the range for the most part. We're at these highs right now, and again, are we going to push up here and see newer highs, or are we going to continue to see some resistance in this zone? If so, then any failure back below this 46.50 down the road, likely next week, could open up a retest of lows or lower. Any pullback that sees a very sharp rejection, like a failed new low of some sort, or some rejection here, could open up a very nice bounce candidate. So are we about to see a swing down and see a rejection and bounce, or are we about to see a rejection that leads to new lows? Where are we in this phase right now? And at the moment, we're in a holding pattern until proven otherwise, and this will give us the boundaries to continue to watch. Here's a look at the NQ. The NQ also trading mostly within the range. The previous session there was a 2-day range until again the last hour where price sold off. Again, despite the sell-off here last hour, we're looking for a bounce back within the range, a rejection at the previous low. This one didn't quite get the previous lows. It bounced off the previous close 3 or 4 times and has now pushed back toward the 16.3 level, now pulling back just below it at the moment. But still, right here at these highs, it's below resistance here, and we're just kind of in the range. And this is a spot here where are we about to see selling pressure that leads to more weakness to new lows from these highs? Again, are we somewhere here about to push downward, or is the next pullback a buying opportunity, something like this here that leads to more strength? And again, how price finishes the week will be very important, obviously likely within this range. And if, for example, we've started the day here higher, if we end the day lower, that will be an indication of weakness heading into next week. Again, next week we also have our next FOMC key level. It's FOMC meeting, and the statement with the federal interest rate decision. 1103 was our last one. We've chopped and traded around that one. We may come right back down into that one as we head into the next FOMC date. Let's take a look here at crude oil. Right now, crude oil is up about 1 1/3%. This one, at the moment, showing a little bit of a pullback, very similar to the NQ here, but this follows an outside day down yesterday, an outside day down. So, we've seen quite a bit of weakness here this entire time. We had a very strong low that led us back to 70.83. We mentioned we could go as high as 75 to 75.50, and right now we're pulling back a little bit. So again, are we going to make that follow-through move into that next upside target zone? If so, we're going to stay above these highs, which is about 69.5 or so, and above 70, somewhere in that area. So if we pull back as deep as that, there could be a buy that takes us back towards 75 to 75.52. Otherwise, a failure to hold that 69.5 zone right there opens up more weakness ahead. And again, this market has pulled back nicely from time to time, but has also seen a continuation where we see the same ahead. So continue to watch that 70 level, 69.5 on a swing basis. For now, on an intraday basis, we're still inside a 3-day, 4-day developing range. with an upward bias toward the upper end of the range at 73 for the day. All right, lastly, taking a look at gold futures. This one has been stuck. It has been stuck all month. We've continued to see it chop around the previous month's close, around the 1780 and 1790 levels. I can now bring this up to the first, 8 days of the month? 1, 2, 3, 4, 5, 6, 7, 8 days of the month. And this is the 8-day range so far. 44% of average, 33.5 points. Normally it's a 69-point range. Clearly the volatility has dropped and we are at the lower end of the curve here. And anytime you go to the low end, you tend to see that volatility increase at some point. So we could be building energy for the next 80 to 100 point move. Given where we are in the chart, for example, last time we mentioned, well, given where we are right now, if we fail to hold 1840, we rotate back down, and that would give us about a 100-point move, and we got it. This time around, we're at the other end of the range. Does that mean we go up for the 100-point move? Or is this a continuation where we may see weakness for the next 100-point move down, or a continuation downward? We don't know yet because we don't have a strong rejection to work off of. Over here, we had a strong rejection, and we said, okay, that's the high. If that's the high and this is the range, then we can forecast. But right now we don't have that. We just have kind of a range that could go in either direction. And once we see that move start to materialize, we'll have our potential move quantified using our ADR indicator down below. So still compression phase. We could see a breakout of 80 to 100 points at some point here fairly soon. Until then, range bound market. All right, that is it for now. We'll see how this plays out the rest of the session. Have a fantastic weekend. Have a great Friday. Also, please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.